Today's company we're going to talk about, it IPO'd back in 21, around October 21. And since its IPO price, it has given almost 120% return, 2x, which is not so good in this market environment. But in a normal condition, it is these are good returns. But
it's a good.
We are in a euphoria. So the company actually, they started as a pharma intermediary company. It's a chemical company. They are not a pharma company. But they supply to pharma companies. Yeah. But so for them also it has to be like regulation wise, they also have to adhere to US FDA. But just because they produce chemicals, that's why it's called chemical company. The company started back in 2002. Their medicines are used in cancer treatments as well. And now, very interesting, they are new business entry into the EV batteries.
EV batteries.
Yeah. So from cancer to chargers.
EV का चक्कर है.
Yeah. But it's hello guys, welcome back to the we are back to the offline format now after I think the break of 2 weeks. So welcome to the Rupeeting podcast known as Common Sense by Rupeeting, and I think we're gonna talk about another chemical company because I think chemical has been a very favorite sector since last few years, but recently almost all the companies have been performed not so good in the past 1 year.
Yeah, I think for the last one and a half year.
Take it either if it's base chemical or specialty chemicals. Yeah, I think the economic condition has not barred any particular company, but I think the signs of recovery are across the board we are seeing. So we thought might as well pick the new chemical company this week as well.
And there's already a decent run up in a few chemical names.
Yeah. Of course they are still down from the peak, but
then they are showing signs of recovery.
So, but today's company we're going to talk about, it IPO'd back in I think 21, around October 21, I don't know. And since its IPO price, it has given almost 120% return. So I mean 2x, which is not so good in this market environment. But in a normal condition, it is these are good returns. But
it's a good.
We are in a euphoria. So, but so the company actually, they started as a pharma intermediary company. It's a chemical company. They are not a pharma company, but they supply to pharma companies. Yeah. But so for them also it has to be like regulation wise, they also have to adhere to US FDA. But just because they produce chemicals, that's why it's called chemical company. So company started back in 2002. So their medicines are used in cancer treatments as well. And now, very interesting, they are doing a new business entry into the EV batteries.
EV batteries.
Yeah. So from cancer to chargers.
EV का चक्कर है.
Yeah. But it's not like they're gonna manufacture battery. There's this component called electrolyte additives, which are used in EV batteries, which we'll go through as we'll explore it further. So that, and also they have a little bit presence in specialty chemicals, which is apart from pharma and apart from their new venture into EVs. So
yes, so basically the company is into three businesses. One is pharma intermediates, second is specialty chemicals, and third, which is the new vertical launch.
So as of now only two.
Yeah, as of now only two.
Yeah, and the third
is electrolytes.
Electrolytes additives. So, but the company we're going to talk about is called Organics. So I think basically we're just gonna go through what the company does because it has its hands in a lot of other businesses. So I think business overview, if you want to take it over, just a simple one.
Cool, yeah. So I'll just talk about what the company does. So I think AMI is a very young company, as in most of the chemical companies which you see have been there in this business since the 1990s or 1980s. But this particular company was founded in 2004. So pretty young company, just like 20 years. Yeah.
Younger than us.
Yeah, that's it.
I'm just saying, bro.
Yeah. So, as Chaitanya mentioned, that the company is into two businesses currently: pharma intermediates and chemical entities, new chemical entities. And majority of the business, I think, comes from the pharma intermediates, right? and also they also make key starting materials for various agrochemicals and fine chemicals as well. So basically it shows that AMI is a starting point for many of the listed chemical companies and unlisted as well, and it has its fingers in a lot of businesses.
And I mean, currently no business is coming from the electrolytes which they will enter. So I think 85% is pharma.
85% comes from pharma, and the rest 15% comes from the new chemical entities.
And which is like specialty chemicals.
Yeah, and the company has currently 4 manufacturing plants, and most of them are in Gujarat only.
Yeah, Gujarat only.
One is in Noida.
That is also very recent. I mean, just this year only they started.
And the others were in Jagadia, Sachin
is there is a place near Surat which is called Sachin. Apparently, Sunil Gavaskar went there. He took a photo of himself with Sachin and sent it to Sachin Tendulkar.
And the chemical hub of Gujarat, Ankleshwar. Matlab every chemical company has to have at least one factory or one research center in Ankleshwar.
Either they have started there or now they are present in. Yeah, but I think interesting you mentioned that most of the company's revenue comes from the pharmaceutical intermediaries business. So first of all, let's just simplify what does intermediary mean for our viewers. So basically, there is something called as API, which pretty straightforward, which goes into your medicine. So you can, the company can manufacture APIs in the form of injectables or capsule or medicine or the.
So basically, API is the main ingredient for any medicine or any therapy,
which basically treats the disease, whatever. But before API, there are a lot of value chain involved, because it's not as simple as taking something and then there is something called as R&D. First of all, molecules are created in the labs. Then a company, let's say for a company like Pfizer, which comes up with their new molecules, they said that we have developed a new molecule to treat a breast cancer, for example. So they have created this entity, but now they need some manufacturer which also does trials and create an API which is stable in any according to because every person has a different any kind of medical condition. I mean, for example, if I have, let's say, high blood pressure and then I'm taking a diabetes medicine, so I'm not living a good life, first of all. And so the medical should be okay with those conditions as well. So there is something called as intermediaries which come between the two process, API and formulation के बीच में there is something called as intermediaries. AMI is actually a very specialized in that. So when they started back in 2004, as you said, they focused only on one particular area which is called something called as chronic disease. Basically, these are diseases for which medication never stops, like diabetes. Chances are once you get the diabetes, you have to take that medicine for the lifetime.
And if you see, the management was very smart in picking
because the demand of the medicine never goes out.
It will never go out. And they'll
same is true with thyroids and all those medicine. So unfortunate for the patient, but fortunate for the company that they have picked this particular area, and now they have presence across cancers, which is called oncology, and there are so many chronic diseases. So what makes AMI special is that they have been in this particular segment for last 20 years. So whenever a new innovators, which as we took an example of Pfizer, whenever they came up with a new molecule or something like that, for them, there's a company which is in the same business for the last 20 years, which has been a good track record, no US FDA observation, nothing like that. Their facilities are all compliance regulatory wise. So for a company like innovator company like Pfizer, it becomes a natural choice to go with AMI compared to others, because there are so many molecules in which the company controls somewhere around 50 to 90% market share, and this is globally, despite China being in the heavyweight in the pharmaceutical.
That's a huge market share, and domestically the TKL market, but then globally also you are on such high standards and having such high market share. Say something about it.
That's why even a US company is the one who is innovating, and generally the CDMO business goes to either India or China. So when the company is in the strong position, it makes a first choice for the innovator companies. So that is what actually helped the company grow into such a level, and I think going forward they hope to continue in this segment. So that is about that pharma intermediaries, exactly.
Okay, and I think you mentioned that they also develop new chemical entities.
Yeah.
So
that is actually, that is very interesting because the specialty business they didn't have any in-house. They ventured into this only by acquisition. So mainly company did 2 acquisition. One was called Gujarat Organics, which is again Jagadia based company, and the second was Baba Fine Organics.
Baba Fine Organics.
Yeah. So both companies actually has a different chemicals. Yeah, exactly. So coming out to the Gujarat Organics, so they use these new chemical entity as you mentioned. These are chemicals as in parabens, salicylic acids, and all those things. These are basically used in your day-to-day cosmetics. Some are also used as a
personal care, animal foods.
Yeah. So basically, in your face wash, if you guys are following the acne-prone face wash, it has to have something called a salicylic acid, which controls your acne. So these guys makes that, and some other chemicals are used in as wide areas such as pet food or agrochemicals. So of course, not acids, but
and I think the name itself suggests that new chemical entity. Such chemicals have never been produced. So this also shows that AMI now has the capability to research and develop such new molecules which have never been there in the chemical world, or in the pharma world.
Also, we mentioned Baba Fine Organics. So that is also very interesting. The company Baba Fine Organics makes something called as photo-resistant chemical, which are predominantly used in semiconductor. Of course, not many. It's not a higher cost as end of the total product as a
but then still it is somewhere in the value chain.
But the interesting thing was the Baba Fine Organics. It was a very small company. They had around 20 crores of revenue. Their net profit was 14 crore, which is 70% of net profit margin. So whatever they were making, it has a so high lucrative business that the company got attracted to that, and now they are focusing on scaling up in the next 3 to 4 5 years. So currently, as we mentioned, 20 crores was I think it was the first half of FY24. So I mean total year basis 40 crores. They want to scale it up to 200 to 250 crores in the next 3 to 4 years. So currently specialty chemicals contribute around 15% of the total company, but going forward company expect only Baba Fine Organics to contribute around 15% of the company's business, and whatever the Gujarat Organics comes up with. So that is also very
basically we can see good growth in the specialty chemical segment as well, because agar abhi 15% and then you are saying that Baba can alone contribute around 15%. So AMI on a consolidated basis it can go up to 20 to 25%.
Yeah,
there is a possibility
because we haven't even talked about the new business.
Yeah,
which is the
wo bhi aayega.
Exactly. So these are just the something which is going on parallelly, coupled with their leadership position in pharma intermediaries and the new venture which is electrolyte additives.
I just had this question. So is it just because pharma being 85% of the business and they were too dependent on that, they wanted to de-risk it, and that is why they are venturing into such newer industries or newer use cases? Or
the company's goal was not like that, because they were doing pretty good in pharma intermediaries. It's just that one of the management interview I was listening to, they said that whenever we found such lucrative business opportunity, for example, when they acquired Gujarat Organics, it was a loss-making entity. So they were getting, it was around 94 crore of acquisition for them. So it wasn't that big, but they saw that facilities were good and we could have used it for other things. In this business, what happens is, once your facility is good, you can create either chemicals or pharma in the same facility. So if there, let's say Gujarat Organics, this original business model would not have worked, they could have still utilized those factories for making pharma. Exactly. So it's more of a factory acquisition rather than a company acquisition. Fortunately for them, the product worked and they decided to continue. So it is like that. It's not like a dedicated facilities.
Got it.
Exactly. And then the third one, the
electrolytes.
Yeah, that is also very interesting. First of all, what is electrolyte and electrolyte additives? These are two different components. So basically, electrolyte is something which helps your electric vehicle battery in charging and discharging. These additives, not to be into chemical engineering stuff, but basically transfer your charge from cathode to anode, and it helps in basically, as I said, charging and discharging. And there's something which I think electrolytes cost around 10%, 8 to 10% of the total battery cost, basically. And there's something called as electrolyte additives. Basically, these are, if I'm not wrong, these are based on silicon made material. I'm not quite sure, but something like that. These additives are basically used in making electrolytes. So this additive again costs around 2 to 3% of the additives cost, total electrolytes cost. Sorry. So company is doing two business model in these two particular things. They are doing electrolyte additive manufacturing, which is basically a chemical only, like how they make for their NC and business specialty chemicals. So they're gonna make electrolyte additives in house. And the second business vertical, they're gonna do a contract development manufacturing, which is CDMO, for electrolytes manufacture. For example, let's just take an example of a Tesla. Tesla, let's say tomorrow comes to India and they decide that we want to sell it here, so they have to manufacture here and everything. So they also want the critical component of their vehicle, which is battery. So they can give order to AMI that makes it electrolytes for us. We will give you all the formula. Of course, everything will be protected and everything patented, and there's a confidential agreement also happens. Same goes with the pharma business as well. So same thing will happen, and AMI will make electrolytes for Tesla without the right of using their technology to make electrolytes from themselves. Otherwise, they could have easily make it and sell it to Maruti or something like that. So that is first CDMO.
Is
additives.
Is AMI the only company to do this in India?
Yeah, good question. AMI is the only company to do this in the world outside of China. But of course, China is there everywhere, but non-Chinese company, AMI is the only one.
Oh, that's interesting.
Yeah, exactly. But of course, it might not be true for a longer time because there are so many companies coming.
Yeah, obviously.
Very lucrative.
Exactly.
So because earlier what used to happen with company used to focus on EV batteries because EV as a market wasn't that big. But now that EV as a market is getting bigger, the battery market is getting bigger, and the components which are used in battery, like how example, there are so many auto ancillaries company now. Even we see company like Samvardhana which has 1 lakh crore of business just based on ancillary. EV market is also going there, and just on the ancillary market of EV, that will also may have the potential to go as high as the IC.
I mean, if they're able to, prove their performance and their specialty in this particular segment, they can also find other use cases for electrolytes also. And if not electrolyte, but then start finding newer avenues of business wherein they can venture or at least start research towards them.
But the electrolyte additive part, which are the small components used to make electrolytes, they're gonna sell it to anyone. So they can sell it to Tesla, even Tata's for that matter, if they want to buy it. So these are two business verticals. Currently, there are only around 300 crores of MOU with the government of Gujarat to set up the factory and everything. They have been in an active discussion with the clients. In a con call, they have not provided any much of detail, but they are saying that they are seeing a good traction in the discussion, whatever they are having. But yeah, nothing concrete yet. But I think that is something which is on the plan. I mean, they have started developing for sample, for example.
And अगर इतना investment करे तो कुछ समझ के ही करेंगे.
Yeah, exactly. It's not a. Yeah, so I think these are the main three business models, two which are existing, one which is the past, and I think maybe you wanna shed the light of why the recent downturn, because it has happened. Companies, I mean, in the last 1 year, it has.
That's the same for each and every chemical company. There is no specific reason for why AMI was in a downturn, but then as China opened up, they again started dumping their products. There was pricing pressure from China. So the Indian companies also had to react in a certain way to counter that particular pressure. And still, I think there was some dip in margins as well, right?
Yeah, exactly.
They went to 18%, and at the peak, they went to 18% in FY24, and their highest ever margin, or the sustainable margin, which they say is in the range of 22 to 24%.
That is almost 6% dip from the peak.
4 to 6% dip. So that was an issue, but they at the same time they showed a decent revenue CAGR of 26%, and EBITDA also grew at a CAGR of 30% over the last 4 years.
Not bad.
Not bad, but yeah, just there was some margin issues in the recent years, recent past. So that
explains the stock's journey. They get nowhere in the last 1 year. Exactly. But I think one good thing for AMI was that the clients and everything is mostly fixed. So the volume growth was there. It's just that the pricing issue was there. So whatever the erosion happened in the terms of lowering of growth, that was because of the pricing not the volume. So whenever going forward, pricing will improve. The growth should be there because volume growth was never tempered in the first place.
And I think in Q4 FY24 there was some signs of recovery.
Yeah, actually, the margin you mentioned 80%. This is a consolidated margin, but in the quarter, I think first couple of quarters the margin went as low as 14-15%. Yeah, so recently they are scaled it to 19 to 20%. So all signs of hiring margin is also there. So
and along with entering into newer businesses like electrolytes, is there any capex plan for the company?
Capex plan, as you mentioned,
other than this,
no, other than because they are entering into the whole new business, so they don't want to do too many things at the same time. So currently there is apart from normal maintenance capex and everything, the biggest thing currently for them is electrolytes. So pretty much that is about the company's, I think, leadership position in the intermediaries business of pharma.
Leadership, 50 to 90% market share in
depending on the molecules.
The pharma intermediates which they manufacture, new chemical entities they manufacture, and usme bhi, I think with this new acquisition and the way they are saying that they'll scale it up, we can see further new product launches or new innovations coming from Ami's side. Then, as you mentioned, electrolytes ka unka chal raha hai. I think by second half or later half of FY25,
we should get
some more clarity on electrolytes division as well.
On the number terms, I mean, what they're going to do in the number terms. But how much it will be contributed to the top line and what
that we'll get to know later only once this actually start manufacturing. So I think this pretty much sums it up.
So that's all about Ami Organic. So guys, this is not a recommendation.
This is not an investment recommendation.
This is just for information
and educational purposes.
Some low quality entertainment purposes. We hope to see you guys in the next video. Until then, bye bye. Like, share, subscribe.
Like, share, and subscribe.
Have a good one.